800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Do you have an invention idea but don't know what to do next? Call InventHelp today. We have representatives nationwide who will explain the InventHelp process step by step. Over 10,000 patents have been secured through InventHelp's patent referral services. The InventHelp data bank includes thousands of companies who have agreed to review new ideas. We've been helping inventors since 1984. Let's help you next. Get started today.
Call 1-800-217-4380. That's 1-800-217-4380. Again, 1-800-217-4380.
Broadcasting from the Kanowski-Bresney studios comes the radio medium Laura Lee Show.
I feel like you had to let him go.
Yes, okay. He was on life support.
You've taken on the burden for his passing. Is that true?
That is right.
There's something to do with a Barbie doll.
He used to stick the old school Barbie dolls in the cake.
Oh my God, you're giving me goosebumps right now.
The radio medium Laura Lee Show. Tune into your spirit every Tuesday at 4 p.m.
My name is Dale Pazinski. I volunteer with United Way to help the homeless in my community learn computer skills and build a basic resume. I don't just wear the shirt, I live it.
Give, advocate, volunteer, Live United. Go to liveunited.org. Brought to you by United Way and the Ad Council.
You're tuned in to Money Matters Boston, 1120 AM WBNW. This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM. Concord, Boston, the Money Matters Radio Network.
Are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
This is Tucker Silva with the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about how Medicaid irrevocable trusts operate. Todd, many people are afraid that if they transfer money to an irrevocable trust, they will be giving up control of their assets and will have to ask their trustee for permission to spend their own money. Now, is this a valid concern?
No, it's really not. And folks, when you think about irrevocable trust, please remember that there are many different kinds of irrevocable trusts. There are some that require a loss of control, rigidity, inflexibility. However, the trust we're talking about when you're protecting assets from a nursing home allow the donor to remove and replace the trustee, allow the donor to have really an unbelievable amount of control over the assets that are in the trust. They can live in their house, they can manage and invest their own money, they can sell a house, they can buy a new house. When the money's invested, they can have the income come directly to them. Folks, the control you keep over your assets in an irrevocable trust is really something you must try to learn about, and that's why we're giving you away a guide today to help you understand these trusts.
Request this brand new guide from the folks at Cushing & Dolan at 866-848-5699. It's called Unlocking the Power of Medicaid Irrevocable Trusts. Cushing & Dolan have been helping families like yours for more than 30 years, and find out if they can help yours too. 866-848-5699, or you can request it from LegalExchangeShow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
As a busy mom, my to-do list is full.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has information to help you and your family live a healthier life.
Visit goredforwomen.org/momlife today.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Marc Fandetti.
Good morning. Happy Friday. Welcome back to the Financial Exchange. We're talking U.S.-China trade deals. We're talking S&P 500 hitting all-time highs. Greg McBride from Bankrate, as well as Paul LaMonica from Barron's are going to be joining us later in the show, separately. Two different interviews. But before we kick things off, we're heading over to inflation land because that's what the Federal Reserve has been testifying about for the last couple of days. That's what Jerome Powell has been facing questions about. That's ultimately what President Trump's been threatening to remove him over. And so let's dive right into the PCE price index and the inflation reading that came out 2.5 hours ago, Mark. So headlines seem to be right in line with expectations. Talk to me about what we saw underneath the hood.
Well, you don't get a lot of data underneath the hood, unfortunately, on personal consumption, expenditures, inflation.
Not
Mike.
line item by line item.
So back to you. No, I'm kidding. We could discern a little bit from this. You're right. It was pretty mild headline, much like CPI, the other big inflation report. But
Consumer Price Index versus personal
you.
Consumption expenditures. We use acronyms too much in this
do.
industry, but two different readings of inflation, and this one being the Federal Reserve's preferred measure.
Yeah, for statistical reasons, they think it better tracks. We talk about trends a lot on the show, too, at least when I'm on. Probably not a coincidence. It's really all I know. This better gets at the trend in inflation, which is what the Fed's interested in. How much is the money supply increasing prices year over year, and do we need to rein that in or boost it because the economy is sluggish? So it helps the Fed answer a question that's really fundamental to the job that they do. And headline PCEL, now I'll use the acronym if that's okay, Headline PCE up 1.1% month over month and 2.3% year over year. So very mild.
That
month
seems
over month.
within the error range of their target.
Absolutely. Nobody would complain about a 2.3% inflation rate. The question for the Fed.
I know plenty of people that would complain about 2.3%.
Really?
Oh, yeah.
Would they?
Only because they have no idea the context, and their point would be.
I mean, even I would prefer
15%.
zero. I'm in the zero. There are some researchers and actual monetary economists who like zero, some like 5, others are in between. I'm closer to zero just for context, but I can live with 2% because that's consistent with my life experience of inflation not mattering. So I'm going to editorialize a little bit and say we should be happy with what inflation's done over the past couple of years, with the caveat that it could easily go off the rails again. We've got tariffs coming down the pike. Even if they are removed, there's still some impulse from those. There's a little bit of pressure building. Yeah, perhaps is maybe the better way to put it. And then there's the fact that the underlying economy seems to be growing at above trend, and there is this relationship between economic growth and its natural limits and the rate of inflation, or more accurately, the rate of change in inflation. So core PCE strips out, much like it does in the case of core CPI, food and energy, because those are the things that can sometimes distort the trend in inflation and make the Fed's job harder. That came in a little bit higher, not alarmingly so, 0.2% month over month. That was due to services, not goods, increasing in price. That's about as granular as you get in this PCE report. Some people pay for data and get more than that, but I think for our purposes that's sufficient. So core tells a slightly different story, as it often does, than headline. And again, there are reasons to think that the past few months have been influenced by special factors, energy prices going down, and special statistical factors. People in the know keep bringing up the fact that seasonal adjustments may have made inflation look too low. And seasonal adjustments is a fancy way of thinking about, well, you wouldn't get excited about retail sales jumping in December because it's Christmas.
Right.
So a seasonal adjustment would shave that a little bit. Similarly, with inflation, some months are characterized by more price increases or decreases, price changes.
Firework inflation in late June is pretty common.
That would have never come to mind for me, but sure. Yeah. For those in states where it is legal.
Yep.
Yes.
Yes.
The rest of us don't care about that component of inflation. So, Mike, a temperate story thus far, and a seemingly a quiescent rate of inflation over the past few months. But there's reason to not think that this is sustainable, and thus that it might be premature to think that the Fed has a green light to aggressively goose demand like some politicians want. That would probably be a mistake, maybe a very big one.
I tend to agree, but let's go with that argument for a moment. The Federal Reserve is trying to read the tea leaves on what is coming in the second half of this year. Is it a growth slowdown that would necessitate a rate cut? Is it an inflation pickup, which might necessitate rates staying where they are or even going higher? The other part of this report that came out at 8:30 has to do with incomes, as well as expenditures. So the price side doesn't seem to be of concern for us today. That can change in the future. Talk to us about what we actually saw in terms of disposable incomes and where and if people are spending those incomes.
Yeah, this is grist for the mill of people who think we ought to be cutting, because PCE, personal consumption expenditures, is, as it suggests, a measure of what people are spending. So month over month, down 0.4%. In real terms, down 0.3% because you subtract the rate of inflation from that, and inflation was minus 0.1.
So compared to last month, we spent fair bit less than...
no matter how you measure it, with or without inflation in the calculation. In the first several months of the year, real PCE after stripping out inflation, which is a correct way to look at it from a standard of living measurement point of view, real PCE is actually down in the last several months. So people are spending less than they were at the end of 2024. And that, I think, summarizes the case for being concerned about the growth outlook, because consumption is such an important component of GDP in an accounting sense,
and falls in line with some other surveys that we've heard about,
and it validates some of the soft stuff that said people don't feel good about the economy.
Whether it's the Michigan Sentiment Survey, whether it is I think we did an interview with somebody maybe from Bankrate just a couple weeks ago about spending surveys and what people's outlook was, and it was generally that, hey, people are saving a little bit more right now, which I'm proud of Americans who can save a little bit. And
well, we didn't save more. Did you notice that, though? We're not, because we spent more in rate of change terms, spent more than income went down, so savings rate went down. Sorry, Mike, I know you were trying to come up with a silver lining.
I was trying to have an optimistic view here, but so our incomes got cut,
spat in your face.
And we spent less, so not as good.
Savings
a
rate went down. It's still higher than it was 6 months ago, but savings rate unfortunately went down. So it's not a great report because we didn't really learn anything about inflation, but what we did learn on the growth side is not good news.
Right.
So is that where you are?
I think that's where I would summarize this. Yes, is the inflation. I guess I wouldn't say we didn't learn anything. We learned that inflation did not. We got reconfirmed that inflation did not uptick in the month of May. That's all we learned here. That was already confirmed by CPI. This reconfirmed it. There are some continuing signals now of, I think, what could be described as a growth slowdown starting to pick up here. Does it take shape? Does it actually hold? We will see. It's not dramatically influencing the likelihood of a rate cut come late July, which is the next Fed meeting in about 4 or 5 weeks. July 30th is the next one. There's, according to the Chicago Mercantile Exchange, about a 1 in 5 chance of a rate cut at that meeting, which is, higher than it was a month ago. I guess I'll put it that way, but still relatively unlikely where we stand now. That rate cut still seems to be more likely when you get out to the fall time period. Anything to add on PCE or what we got in economic data this morning?
I'm good.
Let's take a quick break. When we come back, news of a signed trade deal with China. What's in it? What does it mean for manufacturers here and others? Quick break. That's next on the Financial Exchange.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
There are many different elements to a complete retirement plan, and it takes time to make sure you've covered all your bases. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Our new guide is called Your Retirement Preparation Checklist, and it may offer you the guidance you need to make the right decisions about your retirement plan. From deciding on a specific date to retire, to reviewing your income sources, to picking a place to live, this guide discusses numerous topics that are important to your overall planning. Many other issues need to be considered as well, like solidifying your estate plan and establishing lifestyle goals. Call us right now at 800-393-4001 and ask for your free guide today. That number again is 800-393-4001, or you can request it online at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Elder life planning can be overwhelming, so be sure you're prepared, or you could make costly mistakes that affect your overall plan. Cushing & Dolan are experts in elder law and taxation, and they can devise a plan that covers you in every area where issues can arise. Irrevocable trusts are the most common type of trust that folks use for financial protection, and while they can be complicated to create, they help keep your assets safe because they contain specific protections that many of us need, like the possibility of eliminating your estate taxes. Their new guide is called Unlocking the Power of Irrevocable Medicaid Trusts. Learn more about how these trusts can benefit you and your family by calling 866-848-5699 right now and asking for your free guide today. That's 866-848-5699. Or you can request the guide right now by visiting LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
China's Commerce Ministry, in a written statement, which was then carried by state media, appears to confirm details of a deal that President Trump alluded to earlier, and it promises to review and approve eligible export applications and controlled items in accordance with the law. So just today, we've been hearing the news of this newly inked trade deal. Howard Lutnick said that the U.S.-China trade truce was signed. 10 other country deals are imminent, apparently. And the details here are, sparse, but the one thing remains pretty clear. The U.S. is looking for rare earth materials, and according to Lutnick, in an interview with Bloomberg News, quote, they're going to deliver rare earths to us, and once they do that, we'll take down our countermeasures. So I guess my answer is we don't have to wait terribly long. Right? Like, I don't need to know what's in this deal.
So how's this different from 6 months ago?
It's not. It's the exact same thing.
So it's a lot of dancing around, but we're in the same spot.
Correct. But it hasn't escalated further. And I'm going to take that as good news.
Well, sure, but we've accomplished what in the past 6 months? All this acrimony has gotten us where? We've got the 10% tariffs on everybody. Mm-hmm. And they are raising some revenue, but that's eventually either going to come off company profits or out of your pocket and mine, one or the other. Either it's lower stock prices or higher inflation. You can't have neither of those two things if tariffs are left in place.
Let's actually focus on this for a little bit. So before we move on from the China deal, it appears that there's something now written and signed that is going to result in American companies getting the magnets that they require. I have some serious doubts about that. I don't think that China is going to suddenly just open the floodgates when it comes to these things, because they had a pretty good strategy that was working for them of saying, we'll get you what you need, but we're not going to let you stockpile. So wait and see approach, I think, is the appropriate measure here, but something is apparently signed. I want to go back to the tariffs because it sounds to me they're being talked about more and more as though the purpose that you mentioned of revenue raising may be the real underlying push here. Whenever they talk about the tax bill now, they're talking about the revenue that's going to be raised via tariffs to offset the taxes. They are speaking, as far as I can tell, less and less about punishing unfair trade. They're speaking less and less about bringing manufacturing of certain things back to the United States, other than, steel and aluminum and cars is still a focus. But, I don't hear people pushing for us to, kill the Chinese manufacturing of shoes industry. And so where I'm landing is that I do think that this president and this Congress is looking more and more at tariffs as a more permanent way of driving revenue.
That's fine, but then you can't use them as levers to open up foreign markets.
Agreed.
because we need it now. And by the way, that's the original use of tariffs, and that's a legitimate use of tariffs. It could also be protectionist in that it makes what would otherwise be uncompetitive domestic industries more competitive, giving them more of a now we're paying more for that. So if that is an objective, that's potentially achievable, but you can't have all of those objectives while keeping prices constant or keeping the rate of inflation constant, or and I'm throwing a lot of ors in here, but I think this is all consistent, or have company profit growth as was previously expected. Because if Nike, we're going to talk about Nike later, I guess, maybe. If they've said they ate $1 billion, right? It was past few months. I don't think it lines up neatly with a quarter. So they haven't passed on $1 billion in tariff costs already. So that comes out of what would be a shareholder, I'll just say distribution, even though it could be used for lots of different things. You can't have your cake and eat it too, said differently.
Yeah, I guess it comes to me, is it worth the trade-off, right? So let's assume that you're going to look at tariffs as purely a revenue raiser, and you're using it to offset tax cuts and spending increases on defense. That's kind of the bid that this administration is making is, hey, we are going to tax consumption in order to lower income taxes and increase spending on defense. Is that, am I overstating it?
You stated it way too coherently. If that were the argument from day one, I think we'd all be a lot more comfortable with where we are right now.
Yeah.
Their rationale keeps shifting. First it was fentanyl. We're still under a tariff emergency. We're under like 5 emergencies, by the way, as a country, if you count the involvement in the Middle Eastern war as an emergency. So there's so many emergencies I can't keep track. But the original premise of the tariff emergency was that there were fentanyl flows, and we've got to punish countries who could be doing more to help stem those. And then other rationales have been, so the rationales are shifting.
I agree, and I think that's the biggest problem with all of these, is one day it's about bringing manufacturing back, which we've said, hey, if you're going to bring manufacturing back, you need high tariffs permanently for that to actually work. And then if you do those high tariffs permanently, you're going to have a hit to importers, and you are not going to be able to permanently raise the revenue, was how we kind of landed on it. It's like, hey, that's directly contradictory. You can't both have a 50% tariff that's going to bring manufacturing back to the U.S. and then have a bunch of revenue that's going to offset tax cuts, because bringing the manufacturing back will kill the tariff. Where I'm landing is I think they care a little bit less about that manufacturing side now. I think they've thrown everything against the wall and said, let's see what sticks here, and what seems to be sticking is tariff rates somewhere between 10 and 30% that are going to be there for the long term and are going to raise revenue to offset ever-growing tax concerns.
Yeah, but sticking to today's news, I don't see how this is different. This new status quo will be different than the status quo before we started trade wars with everybody, other than the baseline 10% tariff that we're applying to
with China especially. Yeah, I see nothing different from where we were pre-Trump.
Which is why stocks are back up to where they were. Markets sort of priced in this normalization. As frustrating as it's been to try to follow the bewildering updates on this topic, and as difficult as it is to differentiate truth from the overhype that is pretty characteristic of these folks. Oh, this is the greatest deal ever. This is going to make us so much. We're all going to get rich. And Lutnick today, characteristic hyperbole and stuff like that. Not a lot of specifics, just a lot of hyperbole. We'll get to the specifics, hopefully. So it's hard to say, Mike.
Yeah, at this stage, what we can only say about this trade deal is that it seems to involve us returning to pre-2025 tariff rates with China, maybe, and rare earths flowing back into the United States, which is exactly where we were in 2024.
We're at the end of last year.
Yeah. Now, maybe there's something else in here in terms of improvement, but the big things that we have talked about in terms of concerns of trade with China have been, hey, how are we going to stop them from ripping off our intellectual property? How are we going to stop them from corporate espionage here in the United States? Those are the big things that I've cared about. How do you get them to stop flooding markets with steel and cars that they subsidize? So that's the meat on the bone. If you're going to call this a fantastic trade deal with China, Show me that there's been some progress in any of those issues, and I will agree with you.
How would you measure progress here? Like in a year from now, how would you measure the success of this? I'm going to call it helter-skelter. There are a lot of people who are going to cringe at that and say, no, it's the art of the deal. He's a genius. But it seems pretty ad hoc and winging it from day to day to me. How would supporters of this, either you, Mike, or if somebody wants to text us in, how would you measure the success of this trade policy? A reduced trade deficit, evidence that manufacturing job growth has picked up relative to the average of the past few years? How exactly am I supposed to measure success here?
Yeah, I don't have, I don't know.
Kind of rhetorical.
Yeah.
It would be nice if somebody provided a metric.
Markets remain in positive territory, still sitting around all-time highs. We will see if we end up closing there. We're going to have a full market recap when we return with Wall Street Watch.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Protecting your assets is your most important financial responsibility, and irrevocable trusts can help. Keep your assets safe from probate and the nursing home by calling Cushing & Dolan right now at 866-848-5699. Get their new guide called Unlocking the Power of Irrevocable Medicaid Trusts. That's 866-848-5699, or request it online by visiting LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes, and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide this month titled Your Retirement Preparation Checklist. Mike, one of the items on this is to address outstanding debts, and by that, I don't think we mean pay everything off, but more make sure you have a plan for different types of debt.
Yeah, there's always been that real goal for, I think, a lot of retirees to have no mortgage when you get to retirement. And I still see people trying to accomplish that, even if they might have a sub 3% mortgage, for example. And there can be some psychological benefit to paying off that piece of debt, but where it comes down to is prioritizing, hey, I might have a car loan, I might have a home equity line of credit, and while the mortgage could be the biggest payment, it shouldn't always be prioritized.
Beyond that, I also think it is something that you need to figure out how it fits into your monthly budget and whether you can continue to spend in the fashion that you've been spending, or do you have to make changes there?
Right. A lot of people use some rules of thumb when it comes to how much income they'll need in retirement, and those can be useful, but it all has to be customized to your individual plan. And the last thing you want to do is pay a whole bunch in taxes just to be able to pay down some debt that wasn't really a priority in the first place. And so definitely addressing your debt and knowing how to do that intelligently when you approach retirement is key and important.
The guide is titled Your Retirement Preparation Checklist, and the way to request it from Armstrong Advisory Group is by calling 800-393-4001. That number again is 800-393-4001, and the guide is titled Your Retirement Preparation Checklist.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Markets in positive territory again today, with the S&P 500 hitting a fresh record high as traders are reacting to news on the trade front after Commerce Secretary Howard Lutnick told Bloomberg that a framework between China and the U.S. on trade had been finalized. China's Ministry of Commerce also confirmed it in a statement. On top of all that, the Personal Consumption Expenditures Price Index, the Fed's primary inflation reading, rose a seasonally adjusted 0.1% for the month, putting the annual inflation rate at 2.3%. Right now, the Dow is up by 0.7%, or 312 points. S&P 500 is up 0.5% higher at 31 points, and the Nasdaq also up by 0.5%. Russell 2000 is up by 0.3%. 10-year Treasury yield up by 2 basis points at 4.27%, and crude oil up another 1% today, trading just below $66 a barrel. Nike surging by over 14% after the sneaker and athletic apparel maker reported fiscal fourth quarter earnings that beat expectations and said it expects profits and sales declines to moderate in the future. Nike also said it expects tariffs to raise annual costs by $1 billion this fiscal year. Mike and Mark will have more on Nike coming up here in a matter of moments. Meanwhile, Bitcoin miner Core Scientific is pulling back slightly from its recent rally. The recent run-up was driven by a report from the Wall Street Journal that the company is in discussions to be acquired by AI player CoreWeave. And the New York Times is reporting Uber is in talks with Travis Kalanick, the company's co-founder, who was forced out 8 years ago, to help fund his acquisition of the U.S. subsidiary of a Chinese autonomous vehicle company, Pony.ai. I'm Tucker Silva, and that is Wall Street Watch.
Did either of you actually watch the Faith Kipyegon mile thing? Did you heard about what this was? I probably wouldn't have, outside of my wife being a huge running fan. Did either of you pay attention to it?
No idea what you're talking about.
First time I've heard that name.
Okay, so Faith Kipyegon is the fastest mile runner in the world. And so Nike set up this whole thing in Paris where they made a special suit, special shoes, as well as put together a team of people that would run alongside her to like block wind, because they wanted to see if she could be the first woman in the world to run a sub 4-minute mile, which, again, just to give you a sense for that, like, I'm fairly certain none of the three of us could run 100 meters in the pace that she runs a mile. So it's impressive. She did
I don't
not.
know why you have to dump on us to make your point, but okay.
I'm dumping on myself here too, and
Tucker and I don't claim to be sprinters.
Okay, well,
yeah, we don't.
Again, I'm just trying to set.
Yeah,
she's
really fast.
It goes back to my wishes.
Congratulations.
It goes back to my wishes that at every every Olympics they just had a regular old guy or girl doing the challenge. So, like, all right, if we're gonna just give me a sense for how does Bob from accounting throw the javelin, just to give a sense of how good these people are, I think would be generally helpful.
Oh, just bring an average guy in.
Just an average guy in to just do the same task that has never done it before, just so you can see how impressive these athletes
you can do
are.
a whole range. Now a fat guy. Now a skinny guy.
Yeah.
Now a smoker.
I think it would be a fantastic addition to the Olympics.
That's an interesting take on the Olympics.
Yeah, just George that works construction ripping a cigarette before throwing a shot put, I think would be really good.
I bet a guy in the construction trades could do pretty well.
Didn't John Belushi do a sketch like that where he was ripping a cigarette and he was doing the Olympics?
Yes, he did. Yeah,
I'm pretty sure they did that. Yeah,
it's a Friday. We've gone off the deep end. In any case, Nike sponsored this event.
Donuts, I think?
Yeah.
It was really cool. She did not manage to do it. She ran it in 4 minutes and 6 seconds, which is still a world record. But nonetheless, it did not work out the way Nike was hoping. But Nike, aside from not being able to find a female athlete to run sub 4 minute mile, which again is unbelievably impressive.
Is she interested in being CEO
of Nike?
Because they had some trouble in that department.
They did have some trouble in that department. So to recap over the last few years, Nike's had a few weird missteps. One, they're facing more challenges from upstart shoe companies. So On Running is a big one. Hoka is another of these shoe companies that are getting more of the fashion brand.
And Chinese imports, too. So you think tariffs would help them, but they import, like many companies do, all their intermediate goods.
Yep.
So that's the $1 billion charge that we talked about.
They have faced $1 billion in tariffs in recent months. They have
not a charge, but I'm sorry.
They have attempted and then failed to manufacture some shoes in the United States. They did try this out alongside Under Armour, and both of them couldn't figure out how to do it. And then Nike famously during COVID pulled all their products from third-party seller websites, trying to drive all the traffic to Nike.com, which failed miserably, apparently. In any case, the new CEO has been attempting a turnaround here, and investors are at least excited about it this morning, with the stock up now 14.5%, basically on news that sales weren't as bad as everybody anticipated.
Yeah, well, it could be a turning point, I guess. That's the hope, right?
That is the hope, is, hey, your sales still declined 11%, but we were expecting a lot worse, and so maybe you're finally turning the corner on this business. But focusing on the tariffs here for a moment, because this is one of those businesses that I was referring to, of companies that are very unlikely, absent massive tariffs, to ever manufacture goods in the United States. I would throw televisions, shoes, all sorts of clothing items in the same bucket here, as unless we're going to slap 50% tariffs on every shoe coming into the United States, there's just no way it's going to get done here in the United States. And so how is Nike to navigate this path, and where are they likely to go? So far, the answer has just been on Nike's part, we've absorbed the cost of these tariffs without being able to pass it along to consumers, right?
I guess, yeah. So, well, many companies are in that boat. I guess Nike's challenges are somewhat unique, but yeah.
I think that's been the answer so far, and that's the question that kind of drives all of this for the future too. Is many companies have just said we're eating the tariffs, we're not able to pass them along. Nike's able to do that, Walmart's able to do that. How long does that attitude last? Is it end up hitting profits, or does it end up showing up elsewhere? Because as we've talked about, it's not definite that tariffs will show up directly in consumers' pockets. Via inflation, it could show up elsewhere, too.
No, it helps to think about how firms set prices, and they don't change their prices that frequently, on average about once a year. People have looked at this because it helps answer the question, why does monetary policy work? When the Fed dumps a bunch of money into the economy, why don't prices just go up? Why do relative prices change? People know the Fed's dumping a bunch of money into the economy, and the short answer is, most economists, and by this I mean like probably greater than 80-90%, would say it's because of price stickiness. More technically, they call it nominal rigidities. I'll use a technical term because this is an educated audience, and that's the way economists talk about it.
Yep.
And that's why monetary policy works. The Fed can dump a bunch of money in. It goes to demand first. Everybody gets excited and goes out and spends, and then eventually it pushes prices up, and that's one of the reasons why inflation can become persistent and embedded and is very costly to reduce. And we're seeing the same thing with respect to tariffs. Firms are eating them, which is another way of saying their prices are sticky in the short term, which is a well-known phenomenon. Eventually, if the tariffs stick, to continue with that term, their prices will go up. We've already seen it entering inflation dynamics through expectations. People know it's coming.
Let's take a quick break. When we come back, Financial Times reporting why investors should be cautious of buy-the-dip strategies. We'll be covering that next on the Financial Exchange.
Breaking business news as it happens, only here on the Financial Exchange Radio Network. Elder life planning can be overwhelming, so be sure you're prepared, or you could make costly mistakes that affect your overall plan. Cushing & Dolan are experts in elder law and taxation, and they can devise a plan that covers you in every area where issues can arise. Irrevocable trusts are the most common type of trust that folks use for financial protection, and while they can be complicated to create, they help keep your assets safe because they contain specific protections that many of us need, like the possibility of eliminating your estate taxes. Their new guide is called Unlocking the Power of Irrevocable Medicaid Trusts. Learn more about how these trusts can benefit you and your family by calling 866-848-5699 right now and asking for your free guide today. That's 866-848-5699. Or you can request the guide right now by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Summer in New England is here. The kids are home from school. The sun doesn't set until after 8. It's likely time for you to relax. Well, while you're relaxing, take a few minutes to check out visitusvi.com and research your next vacation in the United States Virgin Islands. The USVI has something for everyone, be it the rich history of St. Croix, the spectacular beaches of St. Thomas, or the tranquil quiet of St. John. Visit one island or all three and enjoy the vacation of a lifetime. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com to make your reservation today. That's visitusvi.com.
Planning for retirement is much like cramming for a final exam, and no stone should be left unturned before you're ready to take that step. Hi, this is Chuck Zada from the Armstrong Advisory Group, and we help folks just like you plan for retirement every day. Our new guide is called Your Retirement Planning Checklist, and in it, we'll remind you of the various issues that may be most important to your planning process. Let's start with the date you choose to retire. That'll depend on a variety of factors, including your income and your health. You may also want to modify your investment portfolio to create ways to maintain the wealth you've already earned. And you'll also want to make sure that you're prepared for major unexpected expenses. Life moves quickly, and you'll need to know if you can cover that cost. Call us today at 800-393-4001. That's 800-393-4001, or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
The Financial Exchange streams live on YouTube. Subscribe to our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John, and are consistently voted one of the top Caribbean vacation destinations. Enjoy world-class cuisine, pristine beaches, rich history, and a vibrant nightlife. Book your trip now to visit America's Caribbean paradise, the United States Virgin Islands. For reservations and more information, go to visitusvi.com. That's visitusvi.com.
Mark, the Financial Times has a piece this morning, why investors should be cautious of buy-the-dip strategies. And they do a bunch of analysis to basically conclude that,
quote unquote,
sometimes stocks go down and then bounce back, and then sometimes they don't.
Whoa,
so
really?
That's what you need to. That's, I guess, what
Stocks
you need
are
to
volatile?
know.
Yeah,
I think there are
These pieces are a little silly.
There are some good lessons to take from longer term history, because if you started investing in 2019, then every time the stock market dropped by 10%, it bounced back within like a few months. Right, like every time that's happened in the last 6 years.
That's why we talk about it. By the way, a statistician would say that's sample bias, that's survivor bias,
right.
Specifically. It's the only reason we're doing this show.
Whereas, in 2008, if you bought stocks when they dipped by 10%, then you lost another 40 in maybe your house. And so I think the conclusion about all of this is, one, what they looked at here is the V-shaped reversals, which they defined as, I think, a drop and then recovery of 5% or more.
Yeah.
They're not happening any more frequently right now than they did in the past. It's just been a while since we've had a deep, long market drawdown. And so, I mean, quite literally, there are many, many investors in the universe today that have not lived through a 20% equity market drawdown that lasts for more than a year.
Well, the only reason you get the results you do is that stocks did survive, and we're here to talk about them. Again, it's survivor. It's kind of subtle, but if you look at any measure of U.S. stock market performance, it's going to be very favorable. That's why we're here talking about it. They don't have this show in the Democratic Republic of the Congo. There's no financial exchange there.
No.
Because their stock market routinely goes to zero. And nobody can trust it. I'm sorry. I'm picking on the Congo.
There are a few other countries you could pick on.
Yeah, you just insert your base, your poorly run developing world country. Mm-hmm. Of course, stocks have always recovered. That's why we're here talking about them. The discussion is biased based on the sample that we chose. I'm not saying stocks won't continue to go up. We talk about this internally at Armstrong Advisory Group a lot. Stock growth, earnings growth, GDP growth, they all have a common trend. So if you think that the structure of the economy will evolve slowly but positively and standards of living will continue to go up, publicly traded companies should participate in that, Mike. It's not really a profound concept.
Yeah, I think the bigger danger that I see with the buy the dip strategy is not the fact that sometimes stocks go down and then go down further. That also happens a lot. The biggest risk that I see people employing when they talk about the buy the dip strategy is the fact that stocks don't often dip. Oftentimes what I hear from people is, well, I've been sitting on the sideline for the last 6 years because I've been waiting for the dip. And it's like, oh, got it. So you have chosen to miss out on 6 years of some of the best equity markets in the world because you were waiting for them to fall apart. And so the bigger lesson for probably 90% of investors is, rather than trying to time a stock market dip and then deploy your safe cash or whatever it is you have, it's oftentimes a much better strategy to just stay invested.
Oh, yeah. It is absolutely empirically superior. And by that, I mean all the data show that is superior. Mm-hmm. A second best strategy, as opposed to not being in equities at all, would be to buy the dip, though, if you believe the stocks are going to go back to their old trend line.
But the danger is that you're
going to miss out on a lot of the recovery, which is where the real money's made in the first couple months after a big.
And, we're sitting at all-time highs in the stock market right now, right? As we speak, S&P 500 is sitting at the highest it has ever been. And so I think the temptation that a lot of people are going to be sitting there saying is, oh, gotta wait to buy the dip. Mark, what happens most of the time when equity markets reach new all-time highs?
They pull back a little.
They do, but then soon after, if you're trying to figure out what's going to happen
by definition, when something reaches... Go ahead, sorry.
You're right. They do end up pulling back a little bit. But usually when an equity market reaches an all-time high, what it does next is reach a new all-time high. Because if you're trying to figure out what happened next with markets, the most likely thing is what happened recently.
I withdraw that answer. Yeah, I see what you're getting at. Look, don't bet against an inexorable upward moving trend unless you have. Don't bet against U.S. GDP. Don't bet against company earnings. Don't bet against. If you're a long-term investor and you have the wherewithal to tolerate the occasional 20, 30, even 50% pullback in equity prices, that is a good time if you're dollar cost averaging in, as 401k investors are. Those processes are more or less automatic these days. Stick with it. That's how you get the wealth generating power of stocks to work for you, not trying to time these more severe wiggles. I get that that's tempting because if you just shave the troughs off of the market, geez, you could double your returns, but nobody can do that consistently.
Nobody. I know there are a lot of folks. There are probably a lot of folks listening that are doing exactly what we're describing. They dollar cost average in their 401k, and they try and ignore it as much as possible. I know there are also others who are out there sitting on stockpiles of cash doing exactly what we just described, which is waiting for that opportunity. And it's tempting to do so right now, too, because, hey, I can earn 4% on my cash depending on what type of thing I'm putting it in places that weren't previously available. There is a lot of, I think, frustration as well as concern when people talk about, hey, how do I deploy this bucket of cash that I am sitting on? What do I do with it? And how do I make sure I am protecting myself? Does it belong in the stock market? Does it not? How do I evaluate that? How do I judge it? Because it is customized and particular to me, not my neighbor next door, not my cousin's kid who's betting on this, that, or the other. It's custom to me. If you have questions along those lines, you are sitting on that stockpile of dry powder that you've been waiting to deploy, or maybe you're just trying to take a look at what you're already doing and check the box to make sure it actually lines up with what your goals are. Please give us a ring at Armstrong Advisory Group. We work with our clients to answer these types of questions. The number is 800-393-4001. We have offices all over New England where we'd love to sit down, but we can talk to you over the phone. We can do a Zoom meeting, whatever works for you and your family. The number, once again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Tucker, I'm going to ask you a question because, Mark, you weren't doing the show with us 7 years ago. But do you remember a while ago when Tesla was in that crisis mode? They were needing to hit their vehicle deliveries or they were going to fall apart. And I remember at that time, something like their chief accounting officer or their CFO departed the company. We just looked at that and said, wow, that just can't unexpectedly left. And you just said you can't look at that as anything but concerning news. And it didn't end up being a problem. They hit their delivery targets. They turned around. They've had a incredibly successful several years afterwards. And it's also why I'm hesitant to say that this is anything but something similar to that. But what we have had happened over the last couple of days is one longtime Elon Musk aide and fixer, Ahmed Afshar, has left Tesla, as well as the company's director of human resources for North America. Not as important roles as the chief financial officer or the chief accounting officer, but whenever we have a company that is, I don't know that we would call Tesla in crisis mode. They are very much struggling with sales. For any other company, it would probably be described as a crisis. For Tesla, they get breaks on some of this stuff and aren't treated the same way as others. Whenever we see a company facing pressures that Tesla is, and you suddenly have executives fleeing, you just take a pause and kind of think about it.
What if this
for
were
a
Carvana?
moment. Right. What if this were a normal company? What if this were Ford? What would you say if it was one of those companies? And I think it's important to apply that to even companies that people tend to give a break. Let's take a quick break from the Financial Exchange. When we come back, second hour, a lot more, including interviews with Paul and LaMonica. We'll be right back here on the Financial Exchange.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, Desi is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM. Concord, Boston, the Money Matters Radio Network.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Summer in New England is here. The kids are home from school. The sun doesn't set until after 8. It's likely time for you to relax. Well, while you're relaxing, take a few minutes to check out visitusvi.com and research your next vacation in the United States Virgin Islands. The USVI has something for everyone, be it the rich history of St. Croix, the spectacular beaches of St. Thomas, or the tranquil quiet of St. John. Visit one island or all three and enjoy the vacation of a lifetime. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com to make your reservation today. That's visitusvi.com.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the timeshare Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
There are many different elements to a complete retirement plan, and it takes time to make sure you've covered all your bases. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Our new guide is called Your Retirement Preparation Checklist, and it may offer you the guidance you need to make the right decisions about your retirement plan. From deciding on a specific date to retire, to reviewing your income sources, to picking a place to live, this guide discusses numerous topics that are important to your overall planning. Many other issues need to be considered as well, like solidifying your estate plan and establishing lifestyle goals. Call us right now at 800-393-4001 and ask for your free guide today. That number again is 800-393-4001, or you can request it online at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva with the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutnick from the law firm of Cushing and Dolan with your Financial Exchange quick tip of the day. And today we're talking about how Medicaid irrevocable trusts operate. Now, Todd, it takes 5 years to protect your assets from the cost of long-term care. If you aren't sure you or your spouse will make the 5 years before going into a nursing home, should you even bother to do your estate planning?
The answer is absolutely yes, you should bother. And here's why, folks. There's people who maybe don't even start their planning until they're 80. It doesn't mean just because you're 80 you don't try, you don't plan, right? 85, you plan. You don't know whether you're going to get sick or not get sick. But by the same token, when you're 65 and you're doing your planning, you also might not make it past the 5 years. So just because you might not make it past the 5 years is not a reason to get this clock started. For example, lots of times when we put assets in the trust, we leave lots of assets outside the trust, especially IRA assets. So let's say you made it 3 years, but you had $200,000 in an IRA outside the trust. If I got $1 million worth of assets in the trust, I'm happy to spend $200,000 of my IRA to get past the remaining 2 years to get me protected from the nursing home with the $1 million that went in there. So getting the clock started is always better than not having the clock started.
Cushing and Dolan have been helping families like yours for more than 30 years, and find out if they can help yours too. Request this brand new guide called Unlocking the Power of Medicaid Irrevocable Trust. Call 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing and Dolan. Cushing and Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Marc Fandetti.
Well, the news has been rolling in the last couple of days, and frankly, this whole week. I mean, we started this week off all eyes focused on the Israel-Iran conflict and the U.S. strikes on Iran over the weekend, and barely even a mention of it today, given everything that's been going on. It's Mike, Mark, and Tucker with you on a Friday morning here, where we've got China trade deals to discuss, inflation readings that are out, the final reading on consumer sentiment from the University of Michigan, and a stock market reaching new all-time highs this Friday. So I'll take it all. Let's starting off with the China trade deal that was announced and confirmed by both Chinese state media as well as Howard Lutnick here domestically, that a deal has been inked. Unclear precisely what that means, other than very likely more precious metals, rare earth materials coming into the United States in the form of magnets that many manufacturers need. To me and to Mark as well, it does not look significantly different than the state of play prior to the announcement of all these tariffs, but we shall see just what else is part of this deal and how it develops, of course, too, because I don't think the U.S. is going to start waiving the tariffs until we actually get the magnets. So anyway, has investors excited? We will see. On the inflation side of things, we received a PCE price index, the Personal Consumption Expenditures Index report, on both spending as well as expenses in the month of May, largely found to be in line with expectations on the inflation side, and still getting continuing reports from different sources that any of the tariff effect on consumer prices has yet to show up there. Is that a fair summary when it comes to tariffs and inflation thus far?
Absolutely.
Separately, on the income side of things,
well, unless inflation would have been lower, but for the tariffs. But companies are telling us they're not passing price increases along yet. They're eating it, which, by the way, would be bad for earnings.
Yep.
You can't get off scot-free here. Either companies eat it, which is bad for earnings, and thus stocks, or consumers eat it, which is bad for inflation and standard of living.
Yeah, I'll just add a caveat that it depends which company eats it, because there's also been the reports of, hey, we want the supplier over in China to eat some of it, and there's been allegedly some success in negotiating some of that stuff.
Yeah, it could be. I'm sorry, companies globally. It could be profits globally.
Yep.
Right.
But the only other caveat to this report, the Federal Reserve, as they are facing mounting pressure, facing some disagreement within the Board of Governors of the Federal Reserve. Maybe that's real disagreement. Maybe it's just posturing to be the next pick to be the chair of the Federal Reserve. We will see. But there's further disagreement in terms of where the path of interest rates should be from here. As a reminder, the Fed cut interest rates 4 times, a full percentage point last year, starting in September. They took a pause at the end of the year and said we're going to wait to see what the effects were of these cuts. By and large, I'm trying to summarize, days upon days of press conferences and announcements within a quick sentence. In the light of the tariffs that have been ticking up, the Fed has said we're taking a pause on any further cuts until we see how all of this plays out, and kind of trying to read the tea leaves in terms of what is possibly breaking in the economy here. The evidence for today, I would say, is lining up more in the camp of weakness on growth is the evidence that we have today, rather than indications of inflation.
Yeah, the Fed has not lowered rates yet because there are other components to the inflation process, inflation dynamics, if you want to use the fancy term, than just whether the economy is running hot, neutral, or cold relative to its potential. There's inflation expectations, which have gone up. They're a big driver of the inflation process. That was the big lesson coming out of the 1970s that caused all economists to basically change the way they think about inflation and change their models for how inflation works. So there's inflation expectations, which have spiked, according to most surveys. Some differ. And then there's the what are called supply shocks. That could be an oil price increase. It could be tariffs. Those are negative in the sense that they hurt people because they push inflation up. There are positive variations on supply shocks. We've actually been experiencing some positive, and I'm using positive in the normative sense here, as in people think it's a good thing. An economist would say a positive supply shock pushes up prices. So it gets a little confusing. Sorry about that. We've been the beneficiary of favorable supply shocks over the past few months with respect to, for example, energy price. I refer specifically to energy prices coming down. The Fed is worried that the real inflation rate, the trend in inflation, underlying inflation, those terms are all interchangeable, is higher than the month-over-month headline readings over the past few months suggest. So you've got the administration pounding the Fed, calling the Fed chair stupid almost on a daily basis. But he's not. I wasn't a fan of his performance during COVID. I'm not a fan of picking Fed chairs who can't read a paper in economics. That's sort of where we are today. Looks like the next Fed chair might not be able to either. So it's not exactly new. That said, the Fed did manage to navigate post-COVID inflation pretty deftly. They didn't seem to overdo it.
So Marc Fandetti summary, monetary wimp, but not stupid.
I don't think Powell's, no. I don't think he's stupid.
Yeah.
And look, the Fed is always making decisions between goosing the forces that push up growth and restraining the forces that push up inflation. You need to decide where on that spectrum of trade-off spectrum, you fall. They could have squashed inflation earlier in 2022 at the expense of growth, at the expense of higher unemployment. The Fed made a choice. Did they make the right choice? Well, political results would suggest they did not. The voters were very, very angry. But in real time, if you had to choose between higher unemployment and slightly higher prices, be honest with yourselves, which would you pick? I've had to ask myself that question as I revisit my own initial harsh assessment of the way Powell handled COVID inflation. I can't say he didn't make the right choice, even though the political process is punishing him for that.
There's been a lot written about the Treasury market this year. Mainly the context of it has been the U.S. government debt load and the foreign buyers of that debt. And we covered a story yesterday of institutional funds dumping longer-term Treasuries. Today we've got Treasuries relatively muted. And in fact, the yield on the 10-year is down to about 4.3, let's call it, down from a high of about 4.6. What do you see or attribute to the common Treasury markets that we've seen most recently?
The recovery in prices and the slight drop in yields. It could just be noise, Mike. By noise, I just mean random forces that push stocks or bonds or any publicly traded, widely held asset class up or down on a given day or week. I don't consider a 4.2% yield on the 10-year materially different
than a 4.5.
And that's a slippery phrase. Yeah, that's exactly what I was going to say. So this strikes me as just noise. I don't think anything fundamental. Am I missing anything? Is anything fundamental change in the past few weeks? Our fiscal situation looks increasingly atrocious, unmanageable, and unsustainable. This Republican tax bill will make the deficit worse, says every independent person who's looked at it, i.e. people who aren't paid to say differently, uniformly think it's going to make the fiscal situation worse. I don't have a solution, but this doesn't help. That should, in theory, all else equal, push up, not down yields, longer-term Treasury yields. We'll know in a year or so how much our fiscal situation, that is, how much the deficit has grown, how much it's deteriorated relative to right now. And then you might see an abrupt step up in yields when eventually the risk of high inflation to effectively default on this debt gets priced in.
One could. We're going to take a quick break. When we come back, Greg McBride from Bankrate joining us to talk about their emergency savings report. We'll also play some trivia here next on the Financial Exchange.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
There are many different elements to a complete retirement plan, and it takes time to make sure you've covered all your bases. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Our new guide is called Your Retirement Preparation Checklist, and it may offer you the guidance you need to make the right decisions about your retirement plan. From deciding on a specific date to retire, to reviewing your income sources, to picking a place to live, this guide discusses numerous topics that are important to your overall planning. Many other issues need to be considered as well, like solidifying your estate plan and establishing lifestyle goals. Call us right now at 800-393-4001 and ask for your free guide today. That number again is 800-393-4001, or you can request it online at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Summer in New England is here. The kids are home from school. The sun doesn't set until after 8. It's likely time for you to relax. Well, while you're relaxing, take a few minutes to check out visitusvi.com and research your next vacation in the United States Virgin Islands. The USVI has something for everyone, be it the rich history of St. Croix, the spectacular beaches of St. Thomas, or the tranquil quiet of St. John. Visit one island or all three and enjoy the vacation of a lifetime. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com to make your reservation today. That's visitusvi.com. Elder life planning can be overwhelming, so be sure you're prepared, or you could make costly mistakes that affect your overall plan. Cushing & Dolan are experts in elder law and taxation, and they can devise a plan that covers you in every area where issues can arise. Irrevocable trusts are the most common type of trust that folks use for financial protection, and while they can be complicated to create, they help keep your assets safe because they contain specific protections that many of us need, like the possibility of eliminating your estate taxes. Their new guide is called Unlocking the Power of Irrevocable Medicaid Trusts. Learn more about how these trusts can benefit you and your family by calling 866-848-5699 right now and asking for your free guide today. That's 866-848-5699. Or you can request the guide right now by visiting LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams, your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
The Financial Exchange is live on SiriusXM's Business Radio Channel 132, weekdays from 11 to noon. Get the latest business and financial news from across the country and around the world, and keep up to date on how it might affect your wallet. That's the Financial Exchange, weekdays from 11 to noon on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts, and now's the perfect time to register for this year's 5K at Castle Island by visiting dav5k.boston. The event will sell out again, so if you're interested in participating, now's the time to reserve your spot. Come out and help support our great American heroes by joining us for the DAV 5K. Visit dav5k.boston to register or to make a donation today. That's dav5k.boston.
Joining us now is Bankrate's Greg McBride to talk about Bankrate's 2025 Emergency Savings Report. Greg, good morning. Thanks for being with us.
Happy Friday. Great to be with you.
Hey, Greg, so this is our annual self-flagellation exercise, right? In lamenting how unprepared people are for a financial emergency. It seems like it's an annual ritual.
Yes, emergency savings has long been the Achilles heel of Americans and their personal finances. We've seen changes in terms of attitudes toward it. There's now a very widespread recognition. People know they don't have enough. They want to have more. What hasn't changed is we just really haven't seen the needle move very much.
What do you attribute that enhanced awareness to? Is it the fact that 401k providers have moved into this area and they're aggressively educating on the subject? Is it articles like this? I know you've been doing this, writing on this subject and related subjects for a long time. What's your sense of how things have evolved in terms of the public mind?
Yeah, I think it really goes back to the great financial crisis. I remember in the years prior to the financial crisis, it was largely dismissed because it was, the idea at the time how home prices were going gangbusters, you didn't have to have emergency savings. Your home was doing the saving for you. The great financial crisis, the spike in unemployment, the jobless recovery that we saw thereafter, that really shifted the attitudes and shifted it quickly. So people recognize that, oh yeah, you do need that, and I don't have enough. And so that was the big change. And I think it was underscored again during the pandemic. We saw unemployment quickly spike as 22 million people lost their jobs. And it took a while before things like enhanced unemployment compensation kicked in. Well, what bridged that gap? Emergency savings. Those that had it were in much better shape than those that didn't. So I think, it's definitely, drove home that point once again, even especially for those that maybe are newer to the workforce and didn't appreciate fully what happened during the great financial crisis.
So what about this year's survey? Are you seeing any changes in I'll call it a long-term trend. That's not quite the right way to describe it, but what's changed, and is it changed for the better or for the worse? Or is it
one change that is notable is the comfort level or lack thereof with emergency savings. We saw over the past couple of years, since inflation spiked in 2022, those that say they're comfortable with the level of emergency savings they have, it's fluctuated between 40 and 43%. That's down notably 2020 and 2021. That was over 50%. And so what happened is we saw that when inflation spiked, all of a sudden it really eroded the comfort level that people had. We didn't necessarily see big changes in terms of having emergency savings, those that had none at all versus those that had sufficient emergency savings. We didn't see big shifts there. Where we saw the shift was the comfort level with what you had, and higher inflation environment, it means that savings you have doesn't go as far. And in tune with that, when we ask consumers, what's the biggest reason you haven't been able to build up that emergency savings? Inflation and high prices have been head and shoulders above everything else the past few years.
Interesting. Hey, one question. You note here that fewer Americans have more credit card debt than emergency savings. Why compare these two? Is it, rather than guess, I'll ask you.
Yeah, it's just, that's another sort of measure of financial well-being or financial distress. If you're in the situation where you have more credit card debt than emergency savings, that's lights and sirens going that, you need to fix something from a financial perspective. The good news is more than half of Americans have more emergency savings than credit card debt, but we still find that a third of households are on the opposite side of that. They have more credit card debt than they do emergency savings.
Any other results you want to highlight, Greg, before we let you go?
Yeah, just that point about having more credit card debt than emergency savings. It's down from where it was the past couple of years, but it's still notably higher than it was pre-pandemic and pre-inflation spike. So, again, the hangover of that really continuing to stretch household budgets and leave higher debt loads and less savings in its wake.
Greg McBride, great data, superior analysis as always. Thanks so much for being with us.
Thanks for having me.
Have a great weekend.
All right, time for trivia here on the Financial Exchange. And on this day in 1994, Aerosmith became the first major band to let fans download a full new track for free from the internet. In 1999, downloading music off the internet became mainstream with the launch of Napster. Trivia question today: how many years did Napster operate before being shut down? Once again, how many years did Napster operate before being shut down? Be the fourth person today to text us at 617-362-1385 with the correct answer, and you win a Financial Exchange Show t-shirt. Once again, the fourth correct response to text us to the number 617-362-1385 will win that t-shirt. See complete contest rules at financialexchangeshow.com.
What a weird stage of the internet that was.
It's kind of awesome, too.
Just parents having no idea whatsoever what was going on on the internet. You're perpetuating music theft on the internet?
That's right.
That was a very strange stage of the internet back then.
Metallica.
I wouldn't know. I was self-policing, so I was fine.
Yeah.
But apparently, there were some miscreants who were abusing intellectual property laws.
Metallica got all mad
Metallica
and everything.
As well they should. I mean, people were stealing their music.
But now
over
that's
and
the
over.
thing.
One analogy is what ChatGPT does today.
Yeah.
It doesn't know anything. It steals your stuff.
Yeah.
So if we put some content from our day job at Armstrong Advisory Group out on the web, we do a nice piece on this or that.
It's
Somebody
going to
asks
steal
that,
it,
it's good,
and
and
then
not attribute it to you.
Right. Yeah. It's really good at that. It's really, really, really good at that.
It's almost like its designers intended it to do that and hope to get away with it because people are accustomed to it. Isn't it strange that that's legal, though? Yeah, they might, because there's like no alternative and everybody thinks AI is indispensable.
Yeah, they
and
very
if we did
well
that,
might.
we would, right?
Because it's really tough to stuff something back in the box. I guess if they make enough money, then they might eventually make them pay for what they did, like actually pay money for what they did. But yeah, it's really tough to stuff that back in the box and say, no, go recreate ChatGPT and make sure you pay everybody for the data first. Yeah,
that ain't
gonna
gonna
happen.
Right?
It's not gonna happen. Speaking of Americans' financial well-being, CNBC reports that student loan borrowers are facing a default cliff as late payments climb. So the cliff that they are talking about here is that there are now 5.8 million newly delinquent borrowers on student loans, and 1/3 of that 5.8 million could reach default status in July if they don't fix their delinquent status by then. And so that is a incredibly discouraging number, and the more and more we look at this whole plan that was initially done by President Trump and then followed on for far too long by President Biden and Democrats of pausing student loan payments, the more I look at that, the more of a disaster that whole thing was. There were so many people who were very seriously talking about how their student loans were going to be entirely wiped out or forgiven and genuinely believed that that was going to happen. Shame on them for buying into that when that had not been written in law. But shame on lawmakers for floating the idea and putting together this disastrous policy, because it led to people getting used to not making these payments and are now facing huge problems with their personal financial situation. Quick break. Wall Street Watch is next.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network. Protecting your assets is your most important financial responsibility, and creating a trust is a great way to help. Cushing & Dolan are experts in elder law. Their brand new guide out this month is called Unlocking the Power of Irrevocable Medicaid Trusts. There are many types of trusts to consider, but a revocable trust can establish the kinds of safeguards you'll need to protect your assets long term. Learn about how the trust can protect your assets from probate and potentially eliminate your estate taxes. If you're closing in on retirement and have an existing trust that needs a second look, or if you need a new trust to ensure that your assets are secure, call Cushing & Dolan right now at 866-848-5699 and let them help you create a plan that gives you confidence in your financial future. That number again is 866-848-5699, or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the timeshare Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled Your Retirement Preparation Checklist. One of the items on that list, reviewing your investment portfolio. And Mike, I think one of the biggest mistakes I see people make is making no changes to their investment portfolio right up until the minute they retire and then making a drastic shift.
Yeah, I mean, look, that drastic shift can sometimes be called for, but only if the preparation hasn't been happening over the years. And that's where having a checklist in place and really addressing these things well ahead of retirement is the most comprehensive strategy and probably the best planned strategy that you can have out there.
And when we talk about an asset allocation in retirement, it's not just, hey, I'm X years old, I need to be, situated in a certain fashion. It's much more taking into account your income needs over different time horizons, any other big spending items that you might have, and obviously risk tolerance and time horizon for retirement. Big difference between retiring at 60 and retiring at 70.
Well, and the tools can change too, right? Even if you were in a tool that made you automatically more defensive as you got closer to retirement, like many 401ks do, it might not be the best distribution tool for you when you're actually ready to pull that trigger, stop working, and then ultimately begin taking withdrawals out of that 401k. And so really important to review this piece by piece.
Our guide this month is titled Your Retirement Preparation Checklist, and the way to request it is by calling 800-393-4001. Again, the guide is titled Your Retirement Preparation Checklist, and the way to request it from Armstrong Advisory Group is by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Markets in positive territory yet again today, with the S&P 500 hitting a new record high. Traders are reacting to news on the trade front after Commerce Secretary Howard Lutnick told Bloomberg that a framework between China and the U.S. on trade had been finalized. China's Ministry of Commerce also confirmed it. On top of that, the Personal Consumption Expenditures Price Index, the Fed's preferred measure of inflation, rose a seasonally adjusted 0.1% for the month, putting the annual inflation rate at 2.3%. Right now, the Dow up by nearly 1%, S&P 500 is up by 0.6%, and the NASDAQ also up by 0.6%, or 128 points. Russell 2000 is up nearly 0.5% higher. 10-year Treasury yield up 1 basis point, now at 4.26%, and crude oil up about 1% higher, trading just below $66 a barrel. Nike stock surging over 15% now after the sneaker giant reported fiscal fourth quarter earnings that beat expectations and said it expects profits and sales declines to moderate in the future. Nike also said it expects tariffs to raise its annual cost by $1 billion this fiscal year. And the New York Times is reporting Uber is in talks with Travis Kalanick, the company's co-founder who was forced out 8 years ago, to help fund his acquisition of the U.S. subsidiary of a Chinese autonomous vehicle company, Pony AI. I'm Tucker Silva, and that is Wall Street Watch. In the previous segment, we asked the trivia question, how many years did Napster operate before being shut down? That would be 2. In its original form, Napster operated for only 2 years before being shut down. 2 years after being shut down, Napster was reborn as a subscription service. Mark from Barnstable, Mass. is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to Mark. And we play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Mark, I want to go in a bit in the weeds here for a moment because Senator Ted Cruz has a new idea for the Federal Reserve. So first off, in 2008, during the Great Financial Crisis, Congress passed a rule that allowed the Fed to do something new, which was pay interest on reserves. And again, to get a bit technical here, can you, Mark, go and put money at the Fed and get interest on your reserves?
Not to my knowledge.
No.
I've never tried, but
mainly reserved for giant banks is who can put their
that's
money
how the
on
Fed
reserve at the Fed.
controls
and
the money supply.
The Fed now pays interest on it, and Senator Ted Cruz wants to limit their ability. I'm guessing due to, well, lawmakers in general, especially Republicans, want to control the Fed more.
These people, honestly, they have terrible monetary policy ideas, this new crop of politicians on both sides of the aisle, from impinging on Fed independence to this harebrained idea that is done under the guise of wanting to cut spending. Hey, guys, if you want to cut spending,
stop spending so much money.
Cut spending. That's the way to do it. Interest on reserves helps the Fed by inducing banks to keep more reserves with the Fed or not. It helps the Fed to hit its Fed funds rate target, which I think we all would agree is a valuable enhancement of that instrument.
It also can encourage banks to keep reserves and not
lend them to another bank at a rate lower than they could get. And there's counterparty risk there. So let me back up and say, if the Fed is going to pay me 5%, I'm not going to loan it to another bank at 5% because there's no risk in the Fed trend. It's very small, the risk premium, but it's there.
And furthermore, if the Fed is going to pay me 5%, I'm not going to loan it out to somebody
Another
who
bank
can't afford a mortgage for 6%. I'm not going to make risky loans for a number.
Yeah,
of
so it's a
different
good
reasons.
way to control their primary instrument, which right now is Fed funds. It doesn't have to be. Historically, it's been other things. It doesn't have to be Fed funds, but it is right now. And this is a good way at really economical cost. Every method they use to target Fed funds has a cost, by the way. It's just really explicit here. And again, I sort of resent, the lack of depth that goes into some of these off the cuff. I think this is where Twitter or social media generally has just diminished, abased is a better word, I think, the dialogue to the point where every stupid idea that gets an airing, people need to stop and think. Now, as I just talk off the cuff here, but this is live radio. It's different. When you're tweeting something, I keep saying tweeting, but we all know I just mean social media posting. There's just this tendency to not think too deeply about it. I want to see Tucker Carlson grill Cruz on this the way he did on the war in Iran. Mr. Senator, what is the federal funds rate? Define it. What are the Fed's objectives? Where is that enshrined? Give me definitions of. My guess is these guys who are Ivy League trained lawyers, but I use lawyers advisedly here. They don't know what they're talking about when it comes to monetary policy. They really need to butt out because, as you could tell, it's getting on my nerves.
I can tell that it is getting on your nerves, and I think the most important thing that you said with all this, lawmakers. If you want to control the deficit, if you want to fix these massive societal problems that we are creating via spending way more money than we are taking in revenue, go attack the things that matter. Go look at defense, go look at Social Security, go look at Medicare, go look at Medicaid. And I recognize that they are taking a look at Medicaid as part of this most recent bill, although the Senate parliamentarian just struck part of that down. But stop pushing out more benefits while cutting taxes at the same time and actually address the issues of this economy. This type of stuff gets, to your point, tweets, and it gets retweets, and you get to play it on your campaign video, but it doesn't actually.
It's not serious, Mike.
No.
And I would reform the Fed too. I'm for more transparency, maybe even linking money issuance to gold or some sort of rule. Gold's a little too volatile for so I'm sort of an old-fashioned hard money person myself. What I don't get is why the new conservatives, as distinguished from me being an old-fashioned one, embrace every harebrained idea to come down the pike and feel the need. And this, I'm making a very general statement here, but they've been doing it so much with respect to monetary policy, specifically Fed independence lately, something which I would have thought would be sacrosanct to the Republican Party of all parties, because they used to be the party of monetary responsibility. They embrace every flaky idea that comes down the pike because they think it'll play with whoever follows them on social media or get them a 10-minute spot on Fox News.
That said, I'll put Democrats as just as
guilty
on that
bad
one.
ideas there too.
Elder life planning can be overwhelming, so make sure you're prepared or you could make costly mistakes that affect your overall plan. Cushing & Dolan are experts in elder law and taxation, and they can devise a plan that covers you in every area where issues can arise. Irrevocable trusts are the most common type of trust that folks use for financial protection. And while they can be complicated to create, they help keep your assets safe because they contain specific protections that many of us need, like the possibility of eliminating your estate taxes. Their new guide is called Unlocking the Power of Irrevocable Medicaid Trusts. Learn more about how these trusts can benefit you and your family by calling 866-848-5699 right now and asking for your free guide today. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Boston historians are up in arms about a new board game that was created by a man in New Jersey called Escape the Flood. And according to them, it makes light of the tragic molasses disaster of 1919 that killed 21 people and injured 150. And folks, if we cannot make jokes about and create board games about a molasses disaster from over 100 years ago, then I think we need to stop being a little bit too uptight. If you want to criticize somebody for making like a 9/11 board game, all on board. That is inappropriate. But we can make jokes about the molasses disaster of 1919 at this point. I think that is fair game now. Let's take a quick break. When we come back, Paul LaMonica from Barron's joins us next to talk about the stock that Berkshire Hathaway is loading up on. We'll be right back.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Subscribe to our page and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network. Summer in New England is here. The kids are home from school. The sun doesn't set until after 8. It's likely time for you to relax. Well, while you're relaxing, take a few minutes to check out visitusvi.com and research your next vacation in the United States Virgin Islands. The USVI has something for everyone, be it the rich history of St. Croix, the spectacular beaches of St. Thomas, or the tranquil quiet of St. John. Visit one island or all three and enjoy the vacation of a lifetime. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com to make your reservation today. That's visitusvi.com.
There are many different elements to a complete retirement plan, and it takes time to make sure you've covered all your bases. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Our new guide is called Your Retirement Preparation Checklist, and it may offer you the guidance you need to make the right decisions about your retirement plan. From deciding on a specific date to retire, to reviewing your income sources, to picking a place to live, this guide discusses numerous topics that are important to your overall planning. Many other issues need to be considered as well, like solidifying your estate plan and establishing lifestyle lifestyle goals. Call us right now at 800-393-4001 and ask for your free guide today. That number again is 800-393-4001, or you can request it online at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Elder life planning can be overwhelming, so be sure you're prepared, or you could make costly mistakes that affect your overall plan. Cushing & Dolan are experts in elder law and taxation, and they can devise a plan that covers you in every area where issues can arise. Irrevocable trusts are the most common type of trust that folks use for financial protection, and while they can be complicated to create, they help keep your assets safe because they contain specific protections that many of us need, like the possibility of eliminating your estate taxes. Their new guide is called Unlocking the Power of Irrevocable Medicaid Trusts. Learn more about how these trusts can benefit you and your family by calling 866-848-5699 right now and asking for your free guide today. That's 866-848-5699. Or you can request the guide right now by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
It happens all over Massachusetts,
Can you tie my shoes?
in every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, Desi is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Hear the Financial Exchange every day from 11 to noon on SiriusXM's Business Radio Channel 132. Keep it here for the latest business and financial news and the trends on Wall Street. The Financial Exchange is now live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
Ladies and gentlemen, the weekend.
Joining us now is Paul LaMonica from Barron's talking to us about Constellation Brands. And Paul, before we get there, I have to say, sitting on our kitchen island right now is a bottle of zero-proof gin. I think my wife made an impulse purchase after her doctor talked about some recent studies on alcohol consumption. It's also an unopened bottle of zero-proof gin because we have not touched it yet. But there's been a trend and a push towards less alcohol consumption. There's been a few big studies recently about it. And yet Berkshire Hathaway appears to have loaded up on Constellation shares. Talk to me about what they might be seeing out there.
Yeah, it's fascinating. There is definitely, I think among younger consumers in particular, a move away from, alcoholic beverages to either low alcohol or zero alcohol. But that being said, Berkshire Hathaway made a big investment in Constellation Brands in the fourth quarter of last year, boosted that stake to about 12 million shares in the first quarter. So now owns about, a little under 7% of the available stock. It's the third largest shareholder. So I think, partly it's because it's a great value right now. I mean, you could argue whether or not growth is ever going to come back to the levels it was, a few years ago. But, shares are now only trading at about 12 times estimates for the next fiscal year. That's well below its 10-year average, of about 20. And I think the case that a lot of investors or a lot of analysts are making is that, okay, the stock's probably not going to get back to 20 times earnings estimates anytime soon because that assumes that everyone starts drinking a lot more again. But say it just gets back to 14, 15, 16, and earnings don't collapse, you've got significant upside there.
I don't know. It might just be one good recession from that uptick in consumption again. We'll have to see. But talk to me about the brand itself. So I think Constellation is becoming more of a household name given their longevity in the space and just the size of them. But what sort of brands do they own? Are they in one specific area of the alcohol market? Or are they pretty diversified?
Yeah, I mean, they are diverse. I mean, beer kind of is the big, one that everyone knows. Corona. I mean, if you're still watching TV, particularly sports events, you can't avoid ads with Eli Manning, Snoop, others, sitting on the beach. La Playa awaits, if you will, I think is one of their taglines right now. But they own other brands that are, gaining a little bit more market share. Modelo is one, Pacifico, but they also own a couple of higher end wine brands. They're selling or just recently sold their discounted wine portfolio to try and focus on the premium end. And they do own some spirits brands as well. But I think the excitement is about hoping to catch the momentum in some of these non-alcoholic beverage brands that are growing pretty rapidly. They have a minority stake in a tonic maker called Hayo that's a non-alcoholic, as well as an alcohol-free sparkling beverage maker named Toast that has a T-O-S-T with the little umlaut over the O.
Now, Paul, I know we're all talking about tariffs a lot less than we were 3 months ago, but every time tariffs get announced, specifically with Europe, the immediate threat is usually to American whiskey brands. Constellation owns High West as well as some others, Buffalo Trace, I think. What sort of risks are out there if you're taking a look at this company in terms of that trade risk?
Yeah, I think there are definitely tariff risks. A company like Brown-Forman, I think, has more tariff-related risk because of the spirits nature of their business, owning Jack Daniels, which is about as quintessential American brand as you can get, but also Woodford Reserve. Constellation does have some, whiskey, and other spirits brands that could get hit by European tariffs. I think the bigger issue might be Mexico and, imports of Corona, Pacifico, Modelo, but it does seem as if the Trump administration has backed off a little bit on tariffs on Mexico being as high as were suggested around Liberation Day. So analysts are a little less concerned about tariffs right now, but I don't think anyone in their right mind in any company that exports and imports a lot of foreign goods needs to be still worried about what's going to happen on July 9th, even though there's optimism today about the U.S. and China and potentially other trade deals coming.
Most important question, what's your go-to summer beverage, Paul?
Friday nights, I'm a brown liquor guy, so I'll be having some bourbon or rye this evening. But, hey, it's the summer. You can't beat a nice cold beer. Maybe not a Corona necessarily, but a cold beer.
Paul LaMonica from Barron's joining us today to talk about Constellation Brands and the uptick in shares from, I can't say Warren Buffett's Berkshire Hathaway anymore, can I? From Warren Buffett's Berkshire Hathaway. Paul, thanks so much for joining us.
He's still going to be around. He's still going to be around. Paul LaMonica joining us today. Thanks so much. Appreciate it. Have a great weekend and talk to you next week. Thanks a lot. Same to you. Have a good one.
What do you have for us for Stack Roulette there, Mark?
A mix of good and indifferent, maybe, or neutral news from the University of Michigan's consumer survey. Sentiment jumped last month. People felt a little. I'm not going to give you the numbers because without a long-term perspective and reference point, they're really immaterial. But consumer sentiment bounced back, and this is go ahead.
I was going to say, this is after a fall that is
epic fall,
really substantial in the beginning part of 2025. I mean, we saw us fall similar to this back in 2022 when inflation was spiking, but outside of those events, we rarely get drops like we saw at the beginning of 2025.
Sentiment collapsed, and at the same time, sentiment collapsed. We saw inflation expectations explode. Not a good combination, obviously. So sentiment has recovered somewhat, and hopefully that will be followed on by a bounce back in the series we talked about earlier, personal consumption expenditures, which is we saw retrenched, I was going to say dramatically, notably last month. Inflation expectations have also come down from, now these numbers are more relatable, so I'll use them. It was 1 year ahead inflation expectation, according to this survey, the University of Michigan Consumer Survey, 6.6% in April. In May, it dropped to 5%. Still very, very high, still near all-time highs, unprecedented outside of the dramatic spike that ended the Great Inflation in the early 1980s. So the administration retreating a bit on tariffs seems to have brought down inflation expectations a bit, but it's still a big problem for the Fed, Mike, as we've been talking about.
No doubt. As we finish up the show here on the Financial Exchange on this Friday ahead of July 4th week, there'll be a shortened trading week next week with the July 4th holiday, but markets also close early on Thursday, July 3rd. We've got the Dow Jones Industrial Average up 485 points, more than 1.1%. The S&P 500 up 43.7%. NASDAQ mirroring that, up 140 points or 0.7%. Taking a look at oil markets, which were all over the place this week. We've got West Texas crude sitting at $65 per barrel after getting up to that $75 range in reaction to tension in the Middle East. That is all the time we have for today. Have a great weekend. We'll see you back here on Monday